Hey guys, John Paulamy here, Actionable Intelligence. Today is Saturday, April 19th, and this is the weekly market update. The disclaimer, anything that you hear or see on this podcast or video is not to be taken as investment advice. I am not a registered financial advisor. I cannot give you personal financial advice. Please do your own due diligence. It's your money. It's your responsibility. Okay, first thing I wanted to talk about was this chart about credit card defaults. They're at a record. You see the gray areas highlighted specifically around right after the internet bubble in 2000, the great financial crisis in 2008, and pandemic recession we had in 2020. And you will note the levels of credit card defaults, the orange line. You will look and see to your right that we are now at record levels and we are not in a financial crisis. And I believe this is partly as a result of the bifurcation of the society between the haves and the have-nots. As wealth disparity has increased, we've had folks trying to maintain their lifestyle through these inflationary times we had recently that were higher than they are currently, obviously, but we've level set the prices higher. Wages haven't kept up, and people have tried to make up the difference with credit cards, which were at the time freely available due to the free money that was being put out by the government and record low interest rates and money printing that was going on. So I'm not attributing this to say that we're in a recession or anything. I just wanted to point this out. This is part of my um, thesis around this bifurcation of the U.S. society. That's where this chart comes in. See here, basically, this is the showing the percentage of GDP that labor has on the right-hand side and profit share of GDP on the left-hand side. And you can see that capital has benefited and labor has not benefited. Labor, going back to the 70s, when we went off the gold standard, by the way, correlation is not causation, but I'm just mentioning that. People have lost their wealth has gone down. Their wages have been stagnant. Their upward mobility has stymied. And it's not just because of the monetary system, which is partially part of it, but it's also the financialization of the economy, um, offshoring of jobs and manufacturing that had something to do with it. So all these things. But you go and look at like the year 2000, was this where you see a major bifurcation? Labor had been making some gains. And then after the internet bubble, we entered kind of this last 25 years of this hyper financialization of the economy. You know, and in that 25 years, we've had somewhere around 15 years of low interest rates, and I think 10 years of zero interest rates. Okay, and this all this money creation and all this financialization of the economy and focus on short-term profits and stock prices and options in the financial markets. And we've seen that labor, we've during the time we've also signed a lot of these, or they went into effect at least these trade packages, NAFTA, and all these other things. So this also plays into the fact of my contention around the Cantillon effect, which I've explained in a previous newsletter. You can go to the Substack and it's pinned. I have a reference page pinned that shows the various newsletters that I've published. It gives like a theme. You can look it up. But the Cantillon effect is basically based on a writings of a 18th century uh, French economist in Cantillon. But basically, in modern times, it means he who benefits is the asset holder that's closest to the money printer. We've had tremendous inflation during this monetary expansion. It just hasn't filtered into prices until recently. We've had inflation in asset prices. And so people who have held assets have benefited by the money creation. Now, when we started sending direct payments to people during the pandemic, then and of course shutting down the means of production, crimping supply and increasing money and putting it in people's pockets in the lower middle class and middle class who have a larger propensity to spend, of course, you're going to have price inflation. And so this is a major problem. And it kind of also backs up what I was saying in the previous slide. People, this is, people are struggling. They're trying to maintain their lifestyle or survive. And so they're going to use any means necessary, including credit. And when the credit runs out and you don't even own your own underwear, you're making payments on your underwear and socks from Target. I mean, where are you as a society or as an individual? So people take their frustrations out and elect someone, put all of their perceptions and hopes onto a person that's saying the things that make sense to them, i.e., the populist, Mr. Trump. Whether his schemes will work, I don't know. But this is what's happening and why it's happening and why we're in a soft civil war in this country between, various factions drawing up their battle lines based on class, race, and soon to be religion. So I wanted to talk a little bit about the Doge deal. I was always suspect of this. Not that I don't think there's a tremendous amount of fraud, weights, and abuse. There is. There's people been stealing from these programs for years, for decades. All kinds of schemes and scams out there. And occasionally something will pop up in the news. Somebody will be so flagrant that they bust them. But it's just a lot of fraud. And there's a lot of fraud in the government. We know that. Everybody knows that. And most people want something done about it. But this kind of tells you what's really going to happen. So here, of course, now this source is the New York Times and the Doge, I guess their website. I don't know. It's hard to get really good information on this. But during the campaign, they were talking about $2 trillion in savings. Okay, then after the inauguration, we're down to 1 trillion. By April 10th, we're down to 150 billion. And now we're at 92 billion with only 63 billion with actual receipts and uh, the receipts. And so I always thought that this was going to not be successful. Why? Because I'm not blackpilling anybody. I'm just telling you how it is. You have 50 years or more of entrenched bureaucratic uh, interest. You have constituencies that have been built up around these things that have tremendous political power that spend a lot of money to make sure that the gravy flows. And you're not just going to be able to go in there with a couple of programmers. They've exposed all kinds of fraud. Has anybody wondered why you have all of these politicians coming out and arguing about how they're against these cuts or trying to demonize Musk? Am I saying that they're going in there with a chainsaw? Yeah. Are there going to be some mistakes made? I mean, they're going in there hard, like you would in corporate America with a corporation that's failing, where you go in and just cut, cut, cut. But that's not what I perceive these politicians are doing. Who's against what trimming and getting rid of waste, fraud, and abuse and criminal behavior? Well, people that are, whose constituencies benefit from this same fraud and stealing. It's that simple. So I say this Dr. Oz guy got put into the government. He's going to do this, that, and the other. Look, you have a limited amount of time. I always said they were probably going to get 150 to 200 billion and call it good. It's just the interests there, the it's like, you know, taking a wooden stick and trying to break through a concrete wall. It's just not going to work. And you only have a certain amount of time to do this. And the entrenched interests are fighting back with everything. They're filing court cases. They're doing all they're refusing to comply. There's all these things going on. And you hear all of these, you know, I'm glad that they, stopped the payment for the $750,000 study on orange frogs, DEI for orange frogs in Ecuador. That's good, but that's not going to solve the problem. The problem is in the Social Security Administration, Medicare, Medicaid, defense. in interest on the debt. That's 80% of your budget. And so there is tremendous fraud in those programs. Okay. People double dipping, people setting up fake stuff, but yet there's people fighting against it. Yes, because people benefit. Wanting to say that making sure that everybody that's getting a Social Security check actually exists and deserves it, not cutting people's Social Security. It's making sure that the people that are entitled to it are getting it, and there's not people, free riding and stealing. But people are against this. This is why you can't get anywhere. They're actually giving press conferences out there, standing on the Capitol steps, you know, getting some Marxist judge somewhere to put an injunction in place to slow the gum up the works because this is what Trump wants to do. Part of it's just that. Part of it's entrenched interests. Part of it's, people are just weird and nuts up there. Some of these people. Some of these people want to tear down the existing structure, bankrupt the country. So as I've said before, this is going to resolve itself and, it's just not the program that's going to go bankrupt and everybody's going to suffer as the United States continues its descent into a third world country, which is what it's going to be eventually. It's going to break up. It's not sustainable. Okay. There's too many. It's like the Soviet Union. Okay. It's not a communist country, but it has so many internal contradictions. I could sit here for days. And these entitlement programs are what I identified a long time ago as what's going to be the coup de grace for this republic because you can't afford it. And they'll try to maintain it as long as possible because the people that get these stuff rely on it and actually vote. And so they're going to, I told you all the deprivations that are coming. Lower Social Security payments, means testing, raising the threshold for Social Security taxes, inflation, money printing, what have you, forcing private investment in 401ks and pension funds to buy government bonds and have financial repression. This is all coming, folks. And even when that doesn't work, then it will all just collapse. By that time, there will not be a United States. There'll be a landmass known as former United States with many statelets and countries. And personally, I think that's a good thing. Now, is that going to happen next week? No, but it is going to happen. You're not going to fix this. Plus, no one is even talking about, most people can't even conceive of these ideas, but if you listen to the people that are doing the research, well, what's going to happen with AI and robotics as they continue to advance and more people are displaced from being able to work? No one's even considered this yet. That's coming over the next several years. That's going to make a tremendous impact on our whole society. So this kind of ties into it. So Ray Dalio, who's a big hedge fund guy, billionaire, he's been talking about these things, about the unsustainability of our debt system. And this is what he's been saying. This is what he said on Meet the Press. This is an excerpt. So this is the interviewer, this Welker person, continued to push Dalio and asked him to name his, quote, biggest fear in terms of a financial crisis. So what did Dalio say? Quote, the value of money. What is a storehold of wealth? That is a bond. In other words, one man's debt is another man's asset, bondholders. And so we're going to be in a situation where if that storehold of wealth is in jeopardy because there's too much supply and demand and so on, we're not, I mean, he's not a good talker. He's kind of like me. His thoughts are not, what he says is not what's in his head. Basically saying there's too much supply and not enough demand, and we have monetary inflation, unquote. Why? Because they're not going to be able to sell all these bonds, folks. Okay. I pointed it out last week. We're running a federal deficit in fiscal year 2025 that's 23% higher than fiscal year 2024. The debts are high. The deficit's higher this year, even with Make America Great in there in the Doge committee. Plus, you got to roll 9 trillion of the 37 trillion in debt this year. How do you think they're going to do it? They're going to have the central bank buy these bonds, or just let interest rates go up high enough to attract people. People are getting in. People have got wise to the con that is the United States financial condition. We not only can't pay our debts, we have no intention of doing it. And so, contrary to the stoops that are in this country that don't know what's going on, most people around the world and other countries kind of do know what's going on. And so that's why they've been divesting themselves of US dollars and not going to buy these bonds. Because why would you give the United States government, who has demonstrated that is not prudent steward of capital, that it has no intention of paying this debt back, with dollars that have the same value today that are they going to have the same value in 10 or 30 years? No. People are not stupid. They do what's in their own self-interest. So it goes on. He goes on to say, Dalio, we will have great disruptions. And that could be like the breakdown of the monetary systems of 1971. It could be like 2008. It's going to be very severe. Yeah. When they can no longer sell the debt and they have to start printing money, I mean, you're basically a banana republic. And if you're creating currency units, Federal Reserve creates currency units to buy the government's debt. The, again, asset prices, I mean, certain asset prices are going to do well. Stock market could very likely go up in that condition. You saw what happened, what benefited during the last time we had these monetary inflations. All you have to do is look at history. It repeats. And so it's, there's no leadership in DC talking about cutting spending. Nowhere. As I pointed out last week, they want to raise the defense budget to $1 trillion a year. It needs to be cut. These programs need to be means tested. Every time I bring it up, you come out of the woodwork, come out of the woodwork. Oh, no, I paid into Social Security. I deserve it. It doesn't matter what you think you deserve. What's possible? Do you understand what running these deficits means? That means you're spending $2 trillion more than you take in a year. And it just goes on the balance of the debt that has to be refinanced. That's why we're in a era of interest rates going up. Historically, the only thing that governments can do, they're not ever going to cut spending. Okay. Don't you understand that? It doesn't matter if it's Donald Trump or Gavin Newsom or whoever comes after Trump. They're never going to cut spending. Okay. That's not how this works. Who's the leadership that's advocating for this? So what's their other option? Just default and have a debt jubilee? Well, then the United States will, no longer be the hegemon if that happens. No one, everybody will run away from it. And so they will do what governments have done throughout recorded human history. They will print money. And that will be able to stave it off for a little bit, but there's consequences to doing that. It's very easy to understand this. As Charlie Munger said, there's billions of dollars of profits in reading history book. Okay? Because everything repeats, because human nature is the same throughout history. And so if you understand where we're going, the timing, I've been buying precious metals for 25 or 30 years consistently. I remember when gold was selling for $250 an ounce. It's 3,300 now. Does that mean the gold prices went up? No, it means the dollar's been debased. But I could still buy the same basket of goods with that gold that I could buy in the early 1990s. I didn't lose purchasing power. The wealth, the labor, the energy expended, my time, I've preserved that. If you have your wealth completely in fiat currencies, they steal from you. You're a slave to that central bank and to that government because they debase that currency over time and they steal your time. They steal your life force from you because your purchasing power declines over time. So what are we seeing? Huge record inflows to gold. Well, this is interesting. Yes, I'm a long-term bull on gold. Gold is the new shiny object now. Everybody's talking about gold. No one was talking about it back here when we were talking about it. Everybody's wants to get into gold now. So what I'm still long-term bullish. Long-term means more than next week, guys. Over the next couple years, over the rest of this decade, I'm very bullish on gold. It's going to make highs that I probably can't even imagine. And everybody's getting into it now. Eventually, it will be a major asset in people's portfolios, unless it's outlawed. The same thing with, like Bitcoin. People will act rationally eventually when they see the handwriting on the wall, but it takes time to change perceptions, right? We've been in this perception of the last 15 years that buy the dip, stocks always recover, tech, AI, to the moon. That has to be wrung out over time, and then things flow into other asset classes that reflect the current reality and where the reality is going. I'm happy to be wrong. I don't want to really live in a country where the gold price is 10 or 15 or $20,000 an ounce and Bitcoin's, half a million. That will be a reflection of currency instability, poor economic prospect, basically, what South American countries were over the last 30 years. People still existed. The countries don't disappear. People adapt, but it's not going to be your father's US. Okay. You're going to have a lot of political, social, and economic chaos, which is what I've been saying. And the way that the United States has been acting with this schoolyard bully, all these policies could have been implemented, I think, a little bit more strategically and not turning people off. People have had enough. Okay, you can't go around the world threatening all, it's not 30 years ago when none of these countries had any power. These countries have power now on the world stage. So maybe I'm wrong. Maybe they're going to get in the next 90 days, they're going to get all these trade deals signed and everything's going to be wonderful. And all this manufacturing is going to come rushing back to the United States. And John was wrong. Well, if that's what you're betting, I'm taking the other side of that. You're in a declining empire, the hegemon's disappearing. When you have that happening and you have one sphere of influence declining, another increasing. So this is why Trump wants this. This is why the powers that be want this. They understand what's happening. And this is why I talk about the Donroe doctrine, kind of receding back into the Western Hemisphere. China will dominate, you know, Southeast Asia, the global South and East, and world manufacturing, by the way. And Russia will control its sphere of influence. And that'll be like your three zones of control. But the deep state, the powers that be, the people that have benefited from the post World War II hegemon, the Atlanticist, they don't want that because they're going to lose a lot of power and influence and money. And so this is what we have. So I wouldn't be rushing out. I had people coming to me over the last couple weeks asking me about gold. People that I know that are not really engaged investors. That's usually an indication of a top. It's not the top because we haven't had the blow off yet, but it's an indication that we're getting ahead of ourselves. When people who never even thought about buying gold are now talking about buying gold. I don't think we've exhibited the blow off top. Now I'm going to get into an asset class a little bit later where I think is undervalued that no one's talking about that I would be putting capital to work. If you have profits, you may want to roll some profits into this other sector that's completely decimated. We'll get into that. So this is what I'm talking about. This is the GDXJ, which is the VanEck Junior Gold Miners ETF. And what I like to say is, I got this from another commentator. When I look at some of these charts, sometimes I'll ask people, would you rather be long or short this over the next couple of years? If I gave you $1 million and said you had to be short this ETF or long, what would you do? And you couldn't take your money out. Well, I'd want to be long this chart because I see it's breaking out now. After a long base of over 10 years, basically, we're breaking out to the upside. That should be telling you. So, yes, there will be periods. It's like when this thing was declining, okay, when it was in a bear market, there were periods where it didn't just go straight down, elevator drop. It works its way down. The same thing will happen as it works its way up. Then you'll get these blow off. We haven't had this yet. You saw during the last bull market. It's coming. It will come. I don't know when. If I knew that, I wouldn't, I probably wouldn't tell anybody anyways. But that's coming. We're just at the beginning of this. But there will be times where you're short-term overbought. There will be pullbacks. There will be severe pullbacks. They will shake a lot of people out. But the underlying, like we just talked about in the previous slides, the underlying things that are driving the gold price, these are long-term trends. Okay. So in the short term, again, going back to the metaphor, analogy, whatever you want to call it, the market being a voting machine in the short term and a weighing machine in the long term. Again, I think that really the gold stocks have just begun to move relative to the gold price. So this was a tweet. Houston, we have a problem. For the last 3 months, even the EIA, Energy Information Agency, has Texas production declining at 250,000 barrels of production per day each month. We've lost 750,000 barrels per day of production in 90 days. And then there was Liberation Day. So there was a chart provided. Now, again, you see the last big drop off in production in Texas crude oil, which is basically the Permian at this point, was during the pandemic because shutting in production, the oil price collapsed, yada, yada, yada. But now we're rolling over. Okay. Why are we rolling over? Well, the price has been low. There's no more of the $40 break evens or cash flowing at $50. All that oil's been produced. And so we're at a higher level now. Okay. $60 doesn't work anymore. And so because it's shale and it has quick declines, we're seeing this. So is this again, we're back to the same argument, which I'm still not 100% convinced of yet one way or another. Is this rollover in production due to price, or are these fields getting to the point where the plateauing transition into terminal decline? We'll have to wait till the next big move in oil prices higher to see. Again, I'm not a geologist, but I follow both camps. And what a lot of folks are saying is some smart folks are saying that we've reached the plateau, the Permian, and no matter what we do, it's going to roll over as we get into less productive areas that are more high cost and harder to develop. That's one argument. The other argument is, well, as soon as the price goes up, they're going to, all these guys are going to rush out and drill all these wells, and this will reverse. Unknown at this point. But what I will tell you is that this U.S. crude production going down is seeding the next bull market in oil because of the decline rates. And if we're not, maintaining, if we're not having those rigs drilling, if we don't have those frac crews out there, it's a Red Queen's race. We've always said that. Just to maintain production, you've had to replace the declining wells with new wells, which are of lower quality areas. Okay, so you have to run faster and forget about even raising production. Now you have to run even faster. Now, again, if we get to oil of $100, $150 a barrel and stay there, okay, maybe that changes it. I don't know. We'll see. That's the discussion. Okay, I think that we're, probably in a plateau. Again, I tell people to go read, I think it was the last quarter or the quarter before GNR report where they talked about this. And it wasn't just the idea that GNR had about some of the neural network work they've done that these things are in decline. The historical example they used was the overall plateau and decline of conventional oil production in the United States back in the 70s during the Nixon administration. Eventually, these are finite resources. That doesn't mean we're going to run out of oil. I know the arguments of other commentators that talk about technology, and price, and engineering prowess, and we'll be able to, all hydrocarbon molecules are fungible. Yes, on paper, that's true. Sasol makes in South Africa took technology that the Germans used during World War II and created huge petrochemical complexes that were able to convert coal into liquid fuel. They have the same thing in Qatar. They have facilities that convert natural gas into diesel, but it takes time to build those and transition to that. I'm not saying it can't be done. There's a plethora of hydrocarbons in the earth. Getting that out of the earth, processing it and getting it into your gas tank is a totally different deal. So we will see. This is a this is a developing story, but I think, you've seen some, I think it's the third week in a row now, we've seen oil prices climbing. Okay. And sentiment in the oil industry is totally blown out. This is the weekly change in Brett net managed money net positions. So you see this futures positions are totally blown out. This is very bullish. That means sentiment is, you know, very weak in the oil industry or in the invest futures traders. Okay. I mean, typically this is going back to 2013. There's no volume there. Then you look at over here on the right, sector fund flows, cumulative global sector fund flows last 12 months. What's the weakest energy? Of course, technology's been over the last 12 months where most of the money's been flowing into, but this is why I'm bullish on energy. And you've been able to buy, if you had a contrarian view, now's the time to be looking. Even at these oil prices, there's companies that if you're looking for a total return, are going to do very well. And if we get into a scenario where we have an oil price going to say 90, 100, Felix Zulauf was recently interviewed again, and he said he's looking to, 150 $50 a barrel or more by 2027. So, you know, predictions about the future are difficult. I get it. But if shale's rolling over like it is, where's the new production coming from to make up for it? Because it will decline rapidly if you don't keep those rigs working. So here's another thing that I'm interested in. Okay. Coal. No one's talking about this. Remember, during the pandemic, we had the big coal run. We've basically round trip. Okay. And so no one likes coal anymore. No one talks about coal anymore. This is what I like. This was right around when the coal ETF was brought back. Remember, they got rid of the coal ETF back here when it was in the doldrums. They brought it back, and that was the top because that's what Wall Street does, right? Ducks are quacking, feed them. Give us a coal ETF. That's what they did right at the top. That's when maximum interest, maximum shiny object, boom. So now we're 2021 levels. And I think that there's, coal usage isn't going away. And so I think this is an opportunity. It's not something that's going to pop next week. It's something you should be looking at because there are some well-run companies that have good assets. So I thought this was an excellent chart. This guy's pretty good on X, the Crude Chronicles. I think he has a Substack also, he or she. But I like this. It's excessive money creation driven by wars and social spending programs underpins every cycle. He's basically talking about populism. And so he gives these various scenarios, okay, or not scenarios, but historical perspectives going back to like 1800. And I agree with that, right? Because during times of populism, um, we throw the economic laws out the window and we just do it. If it feels good, do it. You have the EU talking about doing this $1 trillion defense spending. The German uh, new chancellor has gotten the parliament there, the Bundestag, to revoke these spending limits or the debt limits. Those are gone. The Germans have always been known because of their experience with the hyperinflation of the last century, early part of the last century. They're very averse to getting in that situation again. That's out the window. You see China talking about doing infrastructure spending and all this populism. The United States talking about doing $1 trillion defense budget. This is very bullish. Basically, it ties to all commodities versus world M2 expressed in US dollars, 10-year moving average. So as money supply increases, commodity prices go up. It's like Milton Friedman said many times, many years ago. Inflation is everywhere and always a monetary phenomenon. If you print more money, prices go up. But I think it's interesting to show these various political populist times when money printing actually started increasing. So again, when we've talked about international stocks, which I'm very bullish on, I've said this before, they go in long-term cycles. Okay. And so this is just basically the Vanguard Total International Stock Index divided by the Vanguard Total Stock Market Index for the US. And when this is going down, international stocks are doing poorly relative to US stocks. And this usually, if you look at a longer chart, which they have it on, you can go find, you will see that these things typically go in 10 to 12, 15-year cycles where the US outperforms international and then it reverses and international outperforms the US. And I think we're at a transition point. Now, again, a lot of people are talking about this right now. So is it, I've been buying into these things for over a year. And so we've benefited in the portfolio. It's done well. Uh, would I rush out on Monday? No, but I would look. There are values. There's tremendous value around the world if you look, if you want to do the work. And I think we're going to see a period where international stocks, emerging markets in particular, especially if we think that commodity prices are going to go up, um, a lot of these countries are going to benefit relative to the United States. The United States is overvalued. Again, what's the mantra here? What's the mission statement? Sell overvaluation, buy undervaluation. So I wanted to talk about this because this is kind of a really quick synopsis of, I think, what the administration wants to do, the current one, and what's likely to happen. And so you've probably heard, and I've talked about a little bit, the Mar-a-Lago Accord. And so what is it? This is a pretty good, I mean, it's more complicated, but this is a pretty good synopsis. It's the idea that the U.S. can pull together a grand deal in which everyone pays them some money and agrees to weaken the dollar in return for no tariffs and a security blanket. Many minor elements of such an accord might still be reachable with individual countries. The message from U.S. behavior of the last few weeks is that a true accord to match the Plaza Accord of 1985 is out of the question. Nobody will trust the U.S. enough to do a deal. That leads to the other narrative, option two, which is what I think is going to happen and is happening, exodus from the dollar. On this theory, the U.S. overplays its hand in both defense and foreign policy. The rest of the world decides it is no longer to be trusted, and the huge sums of foreign capital in the U.S. go home in a rush, prompting a vicious circle. The U.S. stock market crashes, and Treasury yields surge as the Trump administration belatedly realizes that it has been getting quite a good deal out of being nice to their allies. Okay, so Bissonnette has said this is what he wants on number one. He wants a new monetary outcome for the world like the Plaza Accord. Most people don't even know what these things are. I need to even do more research into this, okay? But that's what he wants to be part of. He said he wants that. He would like to see that happen. And he wants to be part of that. That's what he said in the Tucker interview. But you see the behavior from the United States is just turning everybody off. Now, again, I don't think everybody's just going to rush out of the dollar over the next year, but people are slowly but surely, we've seen it as people have been putting more money into gold, less money into U.S. treasuries. Of course, a lot of foreign capital came into the U.S. to take advantage of, 2 years or the last 15 years when the stock market was going up, last 2 years when the stock market was up over 20% each year. But that's hot money, right? It's now leaving. It will leave just as fast as it comes in. The dollar is still there. I mean, the U.S. is still a good, still up there, but we're doing a lot of things to wreck it. And I'm for the actual MAGA agenda, a lot of it, but it's not being done correctly. I think they have it in their head that they don't have a lot of time, and so they just got to press the thing to the floor, and it's a Hail Mary because politics, unfortunately, do exist. And the history, as I've mentioned many, many times before, of off-cycle elections, non-presidential year, 2-year cycle elections in the House, is that the Democrats will do well. And if they get back in power, need to research Hakeem Jeffries, become familiar with that name because he will be the Speaker of the House if the Democrats win. He's not interested in working with their He's a very radical person. Okay. And so there's going to be impeachments again, all this other stuff, and nothing will get done. So I think the administration felt that it needed to go all out, blitzkrieg, but it's just, I don't think it's going to work. It's going to have the reverse effect. But they just didn't have the time. I never did think this, I was hoping it would work. I wish them well, but there's just you're trying to reverse 50 years in a year and a half, and you're fighting against a lot of entrenched interests. Maybe they're able to do it. We'll see. But we're seeing the capital flight, right? This is from the FT. The dollar usually moves in lockstep with US yields. As yields go up, the dollar goes up. Why? Because people put money in to capture those yields, forces the dollar up. And then they put here until Liberation Day. What happened? You can see going back, well, this only goes back a couple of years, but basically, as rates go up, the dollar follows it. Okay. And we had you know, it doesn't mean correlation's causation, but when you have such a grave dislocation here of what was normal, what was happening before, you need to take a look and go, why is that happening? Rates have spiked, the dollar's down because people can see that these people are acting chaotically. They don't understand how to get a deal, what's really going on. Everything changes day to day. They see the fiscal out of control nature of the U.S. government, which even goes back to the Biden administration, and before for many decades, and it's starting to culminate. And this chaotic behavior is focusing people's attention on other problems. The U.S. was benefiting from an unsustainable, in my view, setup, and trying to basically turn it topsy-turvy is creating chaos and capital flight. So this will be into the non-financial stuff. This is something that I'm interested in. I grokked this. Maybe I should go to the other chart first. Let me go to this one first. The decline in reading. This is the percent of teenagers who read in their leisure time. It's been declining. The amount of teenagers that read almost every day is down, from about 35% back when I was in high school and down to about 15%. And the amount of teenagers that hardly ever read went from 15% to almost 50%. Again, I go back to what Munger said. I was fortunate because have a very curious mind, so I always read a lot, and I was kind of an introvert when I was younger. And so I would read, read, read. I would read everything, history, anything I could get my hands on. I didn't read a lot of novels in fiction. I read mostly technical books, history books, financial stuff, even though I didn't understand everything. but I think it benefited me because it created that unknown to me. I know now the benefit. As like Munger said, he never knew a successful person that didn't read. I go back to say what he said to the graduating class of Stanford MBA students. One of them asked him what his key to success was, and he said, read 500 pages a day. Now, that's what him and Buffett do. Well, he did before he died. They just read all day and then analyze and think about it, create this knowledge, lattice work of knowledge. And it creates ideas and things in your mind, and you understand. You know, Munger said it many times. There's billions of dollars of wealth, potential wealth in all these history books because, again, human nature does repeat itself. And so this is not good. This is not just applies to the previous slide, my discussion about reading and knowledge and getting smarter. You know, the other axiom that they said is, you know, make sure that you go to bed smarter that day than you woke up. If you're not doing that, you're not progressing because all of these things, you know, just as wealth can exponentially compound over time, so can health benefits of exercise, diet. It's like knowledge compounds. If you're just filling your head full of TikTok nonsense and Netflix shows, you're not going to go to bed smarter than you woke up. And how are you going to advance? How are you going to get new ideas? How are you going to understand what's happening and what's possible if you don't understand history and how people have reacted in the past to things that are same thing happening now? You're not going to have any reference point. You're not going to have any knowledge. You're not going to be able to form an opinion. You're going to react emotionally, which is what most people do. And so I'm not optimistic, you know, when I do see these videos when people don't know anything about anything. They don't even know, I mean, virtually nothing factual. And maybe it's just selection bias for the videos, for views, but I run into a lot of midwits and nitwits. I can't believe some of the stuff people say or believe. So I grokked it. I said, what's the average reading level of the average American in the United States? And so this is what Grok said. The average reading comprehension level of American adults is approximately at a seventh to eighth grade level based on data from the Program for International Assessment of Adult Competencies and other literacy studies. However, about 54% of adults 16 to 74, roughly 130 million people, read at or below a sixth grade level, with 21% considered functionally illiterate, level one or below on a PIAAC, struggling with basic tasks like reading simple forms. Only 12% of adults reach proficient literacy levels. Only 12% of adults reach proficient literacy levels capable of handling complex text. This is what I'm telling you guys out there. If you got anything on the ball, you have no competition. Okay? You have no competition. People are uneducated. They don't know anything. They've never done anything. All you got to do is get to work on time, hustle a little bit, and expand your knowledge base. And you're going to blow away 90% of the people. There is no competition. These figures come from PIAA surveys 2012 to 2017 and reports like those from the National Center for Education Statistics. Socioeconomic factors, education access, and non-native English speakers significantly influence these outcomes. Yes, yes, yes. IQ matters. If you import the lower classes from around the world, this is going to have an effect. People, there is no magic dirt. You don't just show up here, kiss the ground, and become a rocket scientist. If you came from a society, you know, there's differences amongst different peoples. Doesn't mean they don't have worth in God's eyes. They're all humans. Okay. But we already have a significant underclass here. Why are we bringing in the world's underclass? For what reason? Especially when we have an AI and robotics revolution coming that's going to make all of these cheap labor obsolete. And so what is the other reason? I'll let you uh, think on that. And so my point is if you should read, you should force yourself. If you read on a subject for an hour a day in a year, you'll be an expert on the subject. I mean, that's how I got ahead. I got in, when I had to transition into renewables, I didn't know anything about it. I was a steam guy, gas turbine guy. Okay. Okay. You're going to go into wind farms now. So I read a lot. I read the tech manuals. I read about the technology. I took some, you know, online courses. I watched YouTube videos. I got myself up to speed so I could at least stay in the conversation that many people couldn't stay in. They just rolled over there and, it jumped up and bit them. And so I was able to have good people I would work with that helped me also. But I increased my knowledge as I was going along. I became an expert in the field. It benefited me. Okay. That's how you can do it. You can reinvent yourself. You can become a subject matter expert on stuff. Okay. And it does provide value. If there's something you want to get into, you can study about. We have basically unlimited information access now, yet people don't take advantage of it. And unfortunately, some people can't because they don't have the education. They don't have parents that would buy them books. I mean, go to a library. Nobody goes to libraries. I still go there. There's nobody hardly ever in them when I go. So there's a tremendous amount of information out there. But if you can't access it or you don't access it, it's just like going to the gym. It's just like losing weight. Everybody knows how to lose weight. It's just making yourself do it. You have to eat less and move more. There's no magic pill being successful or losing weight or anything in life. So this is not bode well otherwise for our society when most of the people, half the people or more, are basically barely literate. How are they going to comprehend these problems that we have? And they're out there voting. Okay, this is why you have populism. This is why you have this propaganda where they just focus on two or three things and repeat it. Because this is not just unique to the United States. Okay, this has been throughout history. This is how it's been. It will always be like that. Some people are really good at sports and can run real fast. Other people have more intelligence and more capabilities. Now you can overcome your deficiencies. There's people that, have made it to the NFL or whatever, and they were described as having no athletic ability, but just your sheer grit and toughness, they were able to do it. Okay. And have reasonable success. Same thing in business. I've seen complete nitwits that focused on something and became a millionaire roofing houses. But the guy can't have a conversation about anything else, doesn't know anything, which is fine. But what I'm saying is if you're not, you're really dragging a boat anchor around if you don't even have any ability to increase your knowledge. And the way you do that is by reading. So I'm not optimistic, but we'll see. Like I said, it's out there, guys. There's $30 trillion a year trickling down on the US economy every year. If you can't get out there and get something going, then I can't help you. I mean, I just do not buy this, unless you're, mentally handicapped person that's like a retarded or something, that's different. But the average person can improve their lot in life. But if you just want to stay glued to, Netflix and screw around on TikTok and waste time, fill your mind with, Cheetos of the mind, Doritos of the mind, then you're gonna get what you get. You get what you deserve in life for the most part. That's something unpopular that somebody said to me once, and I reacted against it emotionally. But most people do. There are some victims of circumstance and some bad things do happen to people, but most people get what they deserve in life. They make bad choices, they form bad relationships, they don't utilize their time efficiently or the best way, they don't think long term, they don't adopt virtuous traits, and time slips by. And then, you're 30, then you're 40, then you're 50 and 60, then you're out of time. All right, guys, that's it for this week. Thanks for tuning in. We'll talk to you next week.